Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we are going to take a look at AbbVie. This is a biopharmaceutical company out of the healthcare sector. It is June 1st, first day of a new month. Year is really flying by. If you're new to the channel and you have not done so already, go ahead and hit that subscribe button down below and the notification bell so you're notified whenever we put out any new content. On this channel, we cover dividend growth investing. We will do stock pick of the day series like this one. That's what this video here is, on a stock that's pulled back on the day. I cover my dividend portfolio updates every Sunday, so again, tune back in on Sunday for that, as well as some other items along the way. But today, let's take a look at AbbVie. Let's jump right in the video. So if you want to know more about them, check them out, www.abbvie.com. That's www.abbvie.com. That is their homepage where I pulled this information from. AbbVie celebrated launch as a new biopharmaceutical company on January 2nd, 2013. We rang the opening bell on the New York Stock Exchange to mark our first official day as a new biopharmaceutical company with an initial stock price of $34.40 per share. So they've really run up since then. This was a spinoff from Abbott Laboratories. You may be familiar with them as well, right? So they split their company into two sectors, the biopharmaceutical company here, and then their healthcare. It's more along the lines of equipment, right? The equipment that the doctors use for surgeries and that sort of thing. So let's continue on with AbbVie, right? So they have 60 plus conditions treated. So that's all the current pharmaceuticals that they have in 175 plus countries. I guess I didn't realize there were this many countries in the world. I couldn't name all 175, but they are all over the world here. So that's good to know. 62 million plus people treated by AbbVie's products every year, 50,000 employees working in 70 plus countries. 90 plus. So another thing you really want to pay attention to with biopharmaceutical companies is their pipeline, right? Because eventually all of the patents will run out and they will have competition in them. So they need to be continually refilling that pipeline with new drugs. I know that's terrible to say, but that's just the world we live in, right? Their objective goal is to have everyone on some sort of pharmaceutical company, on some sort of pharmaceuticals, right? If they can get pills in everyone's mouth, then they're making more money, and that's what they, pay the dividends out of, how they make money. And as we get older, some of the things we just need as we get older anyway, right? I know I'm on medication for high cholesterol, very high cholesterol actually, so I have to watch that. 90 plus compounds, devices, or indications in development individually or under collaborations or license. So this is about their pipeline. They do 7.1 billion in R&D investments in 2021. That's probably pretty close to every year. And they have 50 plus programs that are in mid to late stage development. So that means they're getting closer to the end of being developed, and then they have to prove out that they're safe and all that, right? 80% of compounds in clinical development with a novel mechanism of action, right? So that's a little bit about AbbVie. Again, if you want to know more about them, check them out at www.abbvie.com. That is their homepage. Now, why we are looking at them today, we are talking about AbbVie Inc., ticker ABBV, out of the healthcare sector. They were down 3.26% on the day, closed out the day at $133.46. 52-week range as low as $131.10, as high as $168.11. So definitely closer to that 52-week low than they are the 52-week high. Average volume 5.8 million. Today's was 10.1. Right, pretty much a sell-off. I don't know why it starts out way down here. Obviously, there was a sell-off through the day, so it should be higher, but it is what it is. Market cap 235.471 billion. Very large cap company here. Beta of 0.55, so they are less volatile than the overall market. Price to earning ratio, I would say, in my opinion, this is very high. PE ratio of $31.48 per share. That's high, in my opinion. Earnings per share, EPS is $4.24 per share. That's decent. Next earnings date is coming up sometime between July 27th through July 31st. Now, for dividend, $5.92 paid out on the year. They are a quarterly payer. We'll see that here in a little bit. Very nice dividend yield, 4.34%. Obviously, if it continued to pull back, that would continue to go up. Ex-dividend date was April 13th. They paid out, let's see here, do we see payout? May 5th should have been, May 15th was their payout, right? So they have paid out their last dividend. You would be in line for their next dividend if you were to buy them now. And according to Yahoo Finance, they have a 1-year target estimate of $165.17 per share. So speaks to some potential upside appreciation, at least according to Yahoo Finance. I am not affiliated, just one of the sites I like to go to. Now, let's look a little deeper, right? We're going to statistics, dividends and splits. We're going to look at dividend yield theory. Their 5-year dividend average is 4.44%. We compare that to their current dividend yield, or what they call their forward dividend yield, which is 4.34. So in this case, they are lower than their 5-year average. So this speaks to potential overvaluation. So right now, according to dividend yield theory anyway, they are potentially overvalued, slightly overvalued, but overvalued nonetheless. Now here is another issue that I want to look at. First issue was they're potentially overvalued according to dividend yield theory. Next one is a very elevated payout ratio, 134.35%. Way too high, right? They're dipping into something, maybe cash on hand or something, money in the bank, so to speak, or taking out debt to pay the dividend currently. 134% plus percent payout ratio is not sustainable. So that's definitely something to watch. And then dividend yield theory says that they're potentially overvalued. So 2 negatives on that one right off the bat. Now let's jump over to what under financials you'd find free cash flow. You'd also find their income statement, their balance sheet. You want to look at all that a little deeper. If you were interested in investing in this company, you definitely want to get into their financials. Make sure they're growing revenue. Make sure their debt they're paying down debt. They have enough assets to cover liabilities. That sort of thing is what you're looking for. But free cash flow is what they pay the dividend out of. You want to see growing free cash flow over time. So 2019 was $12.7 billion, 2020 was $16.7, 21, $21.9, and 22 was $24.2. So they do have growing free cash flow over time. Looks like they are repurchasing stocks as well. That's a little bonus there. Now, I always recommend more than one site. So another one that I like is stockanalysis.com. I'm not affiliated with them either, but I like the way they present the information, especially with this one here. 16 stock analysts have taken a look at this. They call it a consensus buy. I don't necessarily agree with that right now. I would like to see them pull back a little bit more. I would actually like to see them set a new 52-week low and get back down to the $100 range, right around there, maybe even a little below that. I'd probably be interested at around $100, but I think that their free cash flow is concerning, and according to the dividend yield theory, like I said, they are slightly overvalued. But on to stockanalysis.com, and the 16 stock analysts, they have taken a look at it, say they have a low estimate of $146. They currently are lower than their lowest estimate, so if it came back up to their low, that would be a 9.4% increase in the stock price. They have an average estimate of $166.81. This is pretty much in line with what we saw with Yahoo Finance. That would be a 25% increase in the stock price. And they have a high estimate of $195. That would be a 46.12% increase in the stock price. All the while you would be collecting that 4+% dividend yield if you were to buy them now. Another one I like under statistics, for my criteria anyway, is return on invested capital, return on equity. So ROE, return on equity, 49.6%, very high. I like 10% or better or in line with their industry average. This is just extremely high, 49.60, no way to slice it. Very high return on equity. Return on invested capital, same thing, high on that, 16.60. So both beat the 10% that we're looking for as a minimum. Now let's jump over and look at the dividends. Now I do want you to notice that the price targets were last updated on April 28th. They don't always put that in there, but when they do, I like to show you that so that you understand that they have not taken a look at this for a couple months now, right? So this may be outdated slightly, and you'd want to look at the most recent whenever they update that. So April 28th, last time they did an update here. Over to the dividend, same thing. This one's from stockanalysis.com. The one we saw from Yahoo Finance at 134. This is even worse. It says 139. So, if you wanted to take the average between the two, it's still above 130% payout ratio. That is not a good sign, right? Very elevated. They do have dividend growth of 6.64%, but if they're paying out more than they can afford to pay out, that won't last very long. You can see 2021 they were at $1.30. 2022 in January they jumped up to 141. They rode out that 141 until the next January they jumped it up to 148. So currently $1.48 per share. Again, high payout ratio. Dividend yield theory says that they're overvalued. My opinion, they are overvalued right now. I would like them to come back down to 100. I would not be interested in this one at the current value. Just my opinion. This is my investment criteria. If you want to pause and go through this, I like 4. If it's not a financial company, 4 of the top 7. If it is a financial company like a bank or something, I like 5 of 8. Price to book can be used for any of them, but it definitely is used, in my opinion, for financial companies. So pause this and go through this at your leisure. And that is it. Trying to find value in this market. These are supposed to be quick hitters. I like to try to keep them under 10 minutes. I think this one went a little over, but it is what it is. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, trying to build a community of like-minded dividend growth investors so we can share our experiences, share stocks like this, what we think about them, what we think a fair price might be, if we should avoid them altogether, what the issues might be around them, all that sort of information. Like to share that with you. We can all learn from each other, and we all have something to add to the conversation. So don't be afraid to drop your comments down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have a stock you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I will work it into the rotation and cover it on a day it pulls back. Well, that's it. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. And don't forget, Sunday we'll do our portfolio update, and Saturday I will probably push out the dividends paid out for May video. So look for those, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risky accumulating money. Should never invest any amount not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.